Come to escort CAR Sundararajan sir onto the dais and greet him with a book. So I take this opportunity to introduce the speaker of the day. CAR Sundararajan is a fellow chartered accountant and a managing partner of SRBR Associates. 4 decades of practice in experience, having offices at Chennai and Kochi. He has mentored more than 100 chartered accountants from whom who hold prominent positions in banking industry, multinational corporations, and professional practice. Respected speaker has addressed across many branches of ICAI and also visiting faculty for many institutes like ICI, ICMI, ICSI, CAG, and many more. Co-authored a book on bank branch audit and contributed to many ICI committees and expert groups. Has played a leadership role as executive committee member of International Fiscal Association. We welcome you, sir. And stage is all yours.
Good afternoon. Good afternoon. Yeah, because definitely there's a very, very challenging matter now. I have multiple challenges. First challenge, I am standing before an educated Bangalore lot. I always love this branch. Wherever I come, every time I come and go, I learn something and go. So this time also I'm looking forward for some learning. That I will be able to manage. Second challenge is the topic itself, IRAC norms. It has not undergone any change at all. Then where is the point? Once again, that also I will be able to manage. That also definitely I will be able to manage because there are some tonics which can add there. The third important challenge which I will not be able to manage, I need your support, is the heavy lunch you have been provided for. I am sure that the topic will keep you awake. One point which I would like to always in this crowd is please interact so that we will ensure that I am also awake, you are also awake. That is why I care. One thing I can do is I can keep my lunch light. I did it. Anyway, jokes apart, thanks to the branch for having invited me again. I remember having done some 2-3 years back, I had come for a workshop here on bank audit. So they have given me an opportunity for discussing whatever be the little changes or little modifications, or even there is no modification, a refresher. And I have a very good friend, Mr. Niranjan, who is going to take up the next session of audit planning, who is a very good detailed discussion which he can have because we had shared a platform in Trivandrum on an earlier occasion. So I know what is the extent which you are going to have. Value addition in the next session is important. This session is important because I am addressing. Next session is important because he is addressing. So the topic now is IRAC norms. Actually speaking, these income recognition asset classification norms are not undergone any change at all, literally. But can you say that there is no change at all? Definitely there is a change. The significant change is that they have removed the master circular. All along what we have been looking at is master circular on 1st of July. That's what we always think. Master circular will come on 1st of July. Now they have scrapped the master circular. So what is it they have done? They have brought in a direction saying that RBI income recognition directions on November 28, 2025, which is going to bind us all for this current year audit. So having said that a new direction has come, is there anything new? Nothing new. It's old wine in a new bottle. If it has come as a master circular, it would have been an old wine in an old bottle. That's all. Now we have an old wine in a new bottle. But there are significant points which we can look at it in these directions because it is giving us, as an auditors, a lot of strength. Why you are talking about a lot of strength? Wherever we have been going for bank audits, bank branch audits, they keep on saying that, sir, this is not that is not that, this is not that. This can be interpreted like this can be interpreted like this, whatever they are saying. But now what has happened is these directions puts to rest a lot of items by way of concrete definitions given in the directions itself. That is normally what happens is they give a information in some place and provision in some other place. So now what they have done is they have brought in all the directions here itself in this, all the definitions, the directions, so that it will be useful for us. We don't have to have an interpretation requirement at all. So the earlier generation, I'm talking about 90s, when we are, 80s, 90s, when we are doing the audit. At that point of time, we did not have these NPA norms and all. All the provisions which has been done by way of provision for bad and doubtful is on the basis of our own measurement and our own assessment. They started after 1992 National Committee, they started bringing in stricter norms by putting 360 days first, 270 days, 180 days, and now it is settled at 90 days. Having settled at 90 days is for more than a few years. But beyond this 90 days, nothing can happen because this is an international norm. So 90 days is the basic norm for the non-performing asset. So what is that they have done in these particular directions? They have created 6 chapters with 2 annexures. And each and every chapter consists of subdivisions anywhere between 3 to 9, and total subdivision is 31. For me to read this direction, it took only 20 minutes. So any of us can sit and together have a discussion, maximum of 1 hour, you will be able to make it thorough because of 2 reasons. As I already told you, it's an old wine in a new bottle. But always understand, old wine is always better. Many of us will know about this. As old it becomes, it's always better. I'm talking about material only, not anything else. Please understand. I'm talking about material. Annexures deals with only disclosure formats, like your Schedule 3 or Schedule 2 or Schedule 14, whatever it is. We don't have to bother much about that because the bankers are going to fill it up. We are only going to verify it. So what we are supposed to do is go through these definitions, which is very, very clear, and all these chapters you can go through that. I will just lead you into the critical areas which are relevant for this area. So what is that new in these directions? Substances largely unchanged. Improvements are there to give more clarity. So once there is a clarity, we don't have to have a fight with the branch manager at all, or the zonal officer or the regional officer. I don't have to have a branch. I don't have a discussion at all. Directions are aligned with RBI regulations, and new directions reorganize the framework and include formal definitions to key regulatory terms. What are the key regulatory terms as far as IRAC is concerned? They have brought into the definition itself. Once it has been brought into the definition itself, our job is minimized. Before going to the specific points which have been there, we'll also look at some critical items which has been brought in. Last year itself, it has been brought in by way of a circular. Now they have brought in by way of directions. The banks are required to do the implementation of system-driven NPA only with minimal manual intervention. So which means they have permitted manual intervention. First, let us understand that particular point. They have permitted manual intervention, but minimum manual intervention. So this also has an impact on the long form audit report, where they are saying that in the respect of advanced examined by you, whether there are any manual interventions, if at all it is there, please report it. So we are supposed to do any manual intervention is there, we have to report it in LFAR. Here also in IRAC norms, minimum manual intervention is allowed. So I don't say it is allowed. They are saying that it is prohibited subject to minimum requirement. But whenever this manual intervention happens, they have made it very, very clear. Audit trail has to be maintained. Audit trail has to be maintained. The exception report has to be there. And the audit trail has to be provided to the inspecting auditors. This was not there earlier. This was not there earlier. Earlier, we should be going and searching for all these things. Now, they have made it very, very clear. This manual intervention should not be there, and if at all any manual intervention happens, where can we have manual intervention? That's an important area where you can look at it. Invariably, what happens, Upgradation generally doesn't do in the automatic upgradation does not happen. It has to happen only by way of a manual intervention. There may be some specific cases where it might be requiring an additional sanction, change of conditions at the head office level and with the approval. In that situation, there may be some modifications. Or some other basic data which has been created at the time of creating the customer account in the last year, they have made some mistakes, which was a genuine mistake which has to be rectified. That can be rectified. Other than these items, they should not do anything else at all. That is the intention. What was happening earlier, very, very important, what was happening earlier in respect of manual intervention is, as far as the non-performing assets identification is concerned, it is only to be done through computer. But what they do is, they go and manipulate the last date of the installment. When they go and do the manipulation with the last date of the installment, the entire NPA calculations goes for a 6. So we are supposed to verify. We are also, see what happens now, whenever going gets tougher, tougher gets going. We are all tough nuts. I am very confident that charter ones are tough nuts. We will be able to get through all these issues. So we were able to find out certain things when we have been giving report, etc. Then the Reserve Bank of India has made it very clear, no manual intervention at all. Wherever it is there, audit trail has to be there. So please, my suggestion is, when you go for these audits, please ask for any manual interventions there, ask for audit trails of the manual intervention and go through the audit trails. If it is genuine requirement of a correction, you can leave it like that. If there is an ingenuity in that, you will have to ensure that whether the same thing has been happened in other accounts also. Because once you do in one particular account, you tend to do the same thing in all the areas also. This is one item which I would like to mention very, very clearly. We have been armed. We have been armed to go for this particular item. Please ask for the audit trails and examine that. Provisioning largely same methodology has been retained, but they have given statutory regulatory clarity which they have given. Exposure, security and unsecured exposures, PCR, etc., they have brought into the definition itself. All of us know what is exposure, all of us know what is security, but security has been clear, definition has been given. Let us go into that in detail. So for our understanding, I have brought in what are all the concepts which has been specifically defined and which has the comparison between the last and current and is there any change, etc. Whenever there is no change, I am not going to touch upon that. Whenever it is slightly changed, I am going to tell about that. NPA, asset which has ceased to generate income from the bank, which has already been there, but it was not given in the form of a definition. It was given somewhere in the total surplus. Now it has been codified, clearly codified, no problem. Out of order, account, earlier 3 conditions were there. One of those additional conditions were there, that also has been brought in here. The 3 conditions have come into the definitions itself. It is not by way of any interpretation, it has come into the definition itself. If there are outstandings beyond 90 days in excess of DPR limit, and there are no credits for the 90 days, and even if the credits are not there, if it is not sufficient to cover the interest, that is also considered as an NPA, out of order. Once it is out of order, the next level of NPA will happen. But what has happened is they have brought into the definition itself. Earlier it was not in the definition, it was elsewhere. Then overdue. What is overdue? Concept is same. Always there was some confusions. In the earlier terms, there was a concept called past due. All those things are gone now. And overdue also, they have made it very, very categorically and clear. If the due date is today, it has to be paid today. And if it is not paid by this day, at the end of the day, operations are being updated, it will become irregular, overdue. So, it is not even one day next. It is not that it becomes overdue next day. It has to be paid today. Today is the due date. By the end of day operations, it will automatically become SMA 0. SMA 0 is the first level of overdue, and SMA 0 has to be for 3 days. That will come subsequently. So overdue is very, very categorically said. Any day on the installment of due date, it has to be cleared. Otherwise, it becomes overdue. Substandard assets, once again NPA for 12 months, no change. And doubtful, no change. Loss, no change. I am not touching upon that. Security. Security, they have formally defined now. All of us know what is security. But they have made it very, very clear. Security means only tangible assets. Obviously, they have categorically said that guarantees, personal guarantees and letters of comfort are excluded. Because earlier there was a situation, sir, it's a government guaranteed account, sir, can it not be considered as a security? Sir, after it's all our own staff employee, bank employees, sir, their retirement funds are anyway with us, so it can be considered as security, sir. No. They have made it very, very clear. Secured means secured by tangible asset. And exclude specifically guarantees and comfort letters. Comfort letters, what is it? All of us know a PNB episode. It was not letter of comfort, it is actually a letter of discomfort. But now only know that. We did not know about that at the point of time. Now it is letter of discomfort. So this sort of comfort letters, corporates giving guarantee, holding company may be high net worth, no problem. Hindustan Lever Limited may give it on a letter of comfort for one of its subsidiaries, which is the smallest subsidiary. But this letter of comfort is all the most, it's only a guarantee or an assurance, but it is not a security. Why this is so much required? At the branch level, actually secured and unsecured classification is there required only for the purpose of provisioning. Whenever doubtful debts has to be provided, in the secured portion also we have to make a provision. But otherwise the secured and unsecured classification, is it having an impact at the branch level? May not be. But at the head office level, it is definitely having an impact. So from the branch side, we have to push the information correctly to the upwards. So only the secured advances has to be given as secured advances. Please understand, whenever an asset is tangible security is there, those alone has to be given as secured advances. And intangible assets, guarantees, letter of comforts, all these things can be ignored. So whenever an advance is classified as secured, without any security, keep it as unsecured. Next is unsecured exposure. Unsecured exposure means whenever a loan is being given, whatever be the limits which they are having, if the security is less than 10%, then it is called as unsecured exposure. This is once again a definition which was there earlier. Whenever an unsecured exposure beyond 90% happens, it becomes a loss asset, etc. But now they are clearly said what is unsecured exposure. Formal definition has been brought in. PCR, provisioning coverage ratio, once again they have brought into the definition, does not have an impact as far as the branch is concerned. It is provisions held towards gross NPAs. We are not much required to bother as far as the branch auditors is concerned, but it has been brought in as a definition. Exposure. A borrower's exposure includes both funded and non-funded. Earlier what we are talking about is unsecured exposures. Now the exposure means both fund-based and non-fund-based advance is considered as an exposure. Why this is required? Whenever a person says, I have only given a guarantee to the extent of 1 crore, sir, all other things are only 5 lakhs, 10 lakhs is the limit, sir, there is no major issue as far as this is concerned. That is not the intention. The intention is, once you are exposed by way of a non-funded advances itself, there is every potential that it become a funded advances next day itself. In this scenario, it is considered as an exposure. So exposure, they have brought in very, very clearly defined that bank guarantee or LC is given is also considered as an exposure. It has an impact. What is the impact? As far as a particular borrower is concerned, when the branch wants to decide the risk which is there in respect of that particular party, the exposure is going to have the impact as far as this risk is concerned. Next is short-term duration crop and long-term duration crop. Once again, it has been codified, clearly explained. Any crop which has the harvest season is within this 1 year, it is called a short-term duration crop. Anything which is more than 1 year is called as long-term duration crop. This difference they have brought to the system itself. So whenever crops are having short-term duration crop, there are 3 months, 6 months, 9 months, etc. If it is there, it is going to be less than 1 year. Crops like banana, crops like sugarcane, etc. It is beyond 1 year. 1 year and 3 months, 1 year and 6 months, that sort of crops are considered as a long-term duration crops. Definition only I am touching about. The reason for this definition is going to be discussed when we are talking about the agricultural advances. Crop season. There is always a confusion between what is the crop season. I say crop season for brinjal is like this, crop season for vegetable is like this, crop season for coconut is like this. There were lots of confusion. So they have brought in as a definition, crop season for each crop shall mean the period up to the harvesting of the crop raised as determined by the SLBC. So state level banking committee of the respective states will decide what is the crop season for each and every item. So our requirement is whenever you go for an audit where rural branches are there, invariably all of us will have rural branches. So we will have to ask for the SLBC committee discussions of the last year. That file we have to necessarily see for determining what is the crop season as far as this particular branch's activities are concerned. Branch may have activities outside their branches also. So SLBC, whatever they have defined, that crop season they have brought in here. And willful defaulter, all of us know that has been brought in by way of a definition saying that willful defaulter means defaulter as defined in the RBI Act. Any specific questions as far as this circular is concerned, direction is concerned? As I told you, let us have it as a dialogue, let it not be a monologue. Any specific question? Pardon, sir? Yeah, it's for this year. November 2025. It has been issued on November 2025. It is applicable for all the financials which is being done after November 2025. So they have already implemented this manual intervention, this provisioning, crop season, everything. The one advantage is nothing is new as it is. They have only brought in by way of codification. So for the year which you are going to do the audit of 25-26, all these things are applicable. Assuming no more questions, I always, wherever I share with the people, I say that I am very happy if there are no questions. Because if there are no questions, I presume that everything has been fully understood. There is another example, nothing is understood, which I will not pick up that. Because I have been addressing the class, so I would like to mention that everything is understood. Let us go further. Critical norms in the critical issues on prudential norms. I'm only going to talk about issues. Please understand, prudential norms have not undergone a change. 90 days norms is there. As far as agriculture season items is, crop seasons are there. 2 crop seasons for all those things are, there is no changes at all. Let us talk about only critical issues which has been happening. This is also not a very, very new one. It is 2.5, 3 years old. I have just given an example here because I thought of having example discuss an issue that will be better. There is a sanction of 6/6/2020. In amount sanctioned is 1.2 crores. Tenor is 5 years. A repayment of 60 monthly installments of 2 lakh each covers the amount. Interest is as and when debited, and the repayment is commencing from July 2020. This is what the brief conditions of the sanction. Are you able to understand any specific flaw or reason or mistake in this? If you open that nut, the class can be disbanded because you have understood everything. Anything specific? As and when debited. Is there anything catch in that? As and when debited. Today it is debited, today it has to be paid. That's all. No, in EMI cases, interest will be included. Let us not bother about EMI cases. This is a term loan where interest principal is divided into 60 installments and interest is being debited. Any other? The point is, the repayment is made on 60 monthly installments of 2 lakh in each, commencing from July 2020. In 2000, somebody is telling about that. The date has to be mentioned. In 2021, there was a circular which states very, very clearly, no loan statements or documents can be mentioned without a specific date on which the repayment has to happen. So what happens is, the loan is given in the month of April 1, 2025. And they say that the monthly installments falls on May 2020. So when you go and ask them, June, July, August, 3 months has not come, sir, it has to be classified as NPA. Sir, I have time up to 31st of August, May, June, July. 31st of July, I have time, sir. Actually, the due date is 1st of May. So they have made it very, very clear. On 2021, there was a circular wherein they have said that the dates of the installment, dates on which the amount is falling due as installment, and also the amount of principal interest, etc., wherever the term loans are concerned, has to be made it categorical. This is what given in the circular. So this is a correct example wherein the monthly due date is mentioned as 15th. Here it is 15th. You can take it as 16th or 17th, as the case may be. Why this is critical? Because earlier there was an interpretation that the NPA can happen anytime only at the end of the month. For example, if I am going to do an audit for the month of March 2026, they will say on 31st of March 2026 only that NPA will be identified. It is not the case because the due date is fixed, and from that due date, if the money has not come for 30 days, it will automatically become SMA 0. And from that day, it is not coming on 60th day, it becomes SMA 1. And if it is going to 90th day, it will become SMA 2. And after that, it becomes an NPA. So there is no standard date on which a branch can identify an NPA. There is no specific date on which the bank identifies as an NPA. The accounts gets automatically identified as an NPA once the date is expiring. Is that clear for you? Very, very important item which has to be discussed about. You don't have to have anything at all from your side to be examined in respect of those accounts. Whenever the due date is fixed, on that day money has to come. If it has not come, the next day it is SMA 0. In fact, at the same day, end of day operation is becoming SMA 0. 30 days, SMA 1. 60 days, SMA 2. 90 days, NPA. So the date has to be mentioned. This is what I have mentioned in this particular item. So in this particular case, if I understand that, let us, for an understanding, we can look at it. If the due date is 15th of December 2025 in one particular case, if it is not come, it will become on 14th of January, because 31 days is there in December. 14th of January itself, it will become SMA 1, and SMA 2 on February 13th itself. 13th February, it will become SMA 2. On 14th of March, it will become NPA. Don't presume 15th is the due date, so next month 15th, next month 15th, next month. It is not the case. That is why I am making it very, very clear. If it is 15th of December, SMA 0, 15th of December. Because its due date is 15th of December. By the end of day operations, money has not come, it has become SMA 0. They say, next day they come and remit the amount, it will not be SMA 0, it will become regular account. No doubt at all. But if it is not coming, it will become SMA 0, it will maintain SMA 0 for 1 month. On 14th of January, it will become SMA 1. 13th of February, it will become SMA 2. And on 14th of March, it will become an NPA, not on 31st of March. I hope I am clear. If you have any specific doubt, now itself we can ask. Date is very, very critical. On the date, has to be filled up in the documents. Please ensure that the documents are to be filled up according to that particular date. So this is what is SMA 012. This is what the table which has been given in the NPA, our guidance note also. Up to 30 days, SMA 0. 30 days to 60 days, SMA 1. And 60 to 90 days, SMA 2. And what is default? Default is non-payment of debt or part of the debt or an interest. If it is not paid by the due date, it is default. And in respect of CC accounts and working capital rotation accounts, for 30 days, if it is not operated regularly, if it is beyond that limit, it becomes SMA 0. How to flag this SMA? Point is, borrower accounts shall be flagged as overdue by the lending institution as part of their day-end process. This I have not defined. It is given in the definition itself. So don't presume that I am interpreting. I am only dictating what has been mentioned in the directions. Day-end process for the due date, irrespective of the time of running such processes. Why this was brought in? Many branches, on 31st of March, they try to capture these borrowers. They don't come at all. On 1st of April, they come and remit the amount. Can it be considered? No. No, it cannot be considered. By 31st of March, if the money has not come, gone. Same way about 31st of December, January also. I'm not talking about any particular day or particular month end. I'm just talking about what they have been doing is, some occasions they keep that accounts open, or even the accounts is closed, the next day they come and open it, it will be sorted out. Because anyway, the next day money has come, sir. Why do you bother? That situation is not there. I would like to repeat on particular item. In fact, day before yesterday, I spoke about the same thing in SARC, same matter. So I'm repeating. One of the members asked, sir, how do you say, sir? We have an accounting standards which talks about events occurring after the date of balance sheet date. So on 31st of March, it is an NPR, whatever it is. On 3rd of April, money is coming. Why are you bothered? We will have to account for it. How many of you are concur to this particular point? How many of you concur? 1. Others concur or don't concur? 2, 3. Those who have concurred are making mistake. Those who have not raised their voice, I'm not saying they are not concurring. Those who have not raised their hands, I presume they are right. Because RBI has categorically said, these events occurring after the date of balance sheet is your standard. As far as we are concerned, if the date is that particular date, on that date it has to be classified as an NPA. On 1st of April, if the money is coming, let them upgrade in the next year. Please understand, my dear friends, I have been representing a couple of people. One of the senior auditor firm where they have removed as NPA because on 4th of April they have received the full amount. Please understand, full amount. The entire loan has been closed. On 31st of March it was a NPA. On 4th of April they came and remitted the entire amount. So they took it up, they brought the notes in the LFAR, but they have removed it. But RBI sent a notice to that particular chartered accountant stating that, how have you violated this law? Because NPA norms is specific point driven. you cannot have the clause. So those 3 or 4 who raise their hand is totally wrong. Once again, I repeat, others who did not raise the voice, appa, ordinary. It is not the question of practical view. It is as far as RBI is concerned, they don't want to have any practical view at all.
Even in the example that you took, sir, you said 3 days the entire amount was. So this is nothing but now just paperwork. Now, as chartered accountants, we will qualify it as NPA. The provisioning will be done for the balance sheet purposes. But in real life, we all know that this is a difficult thing to prove, and it is impractical. In my experience as bank auditor, I would take, even if it is an RBI issued notice, I think it is extremely impractical if the account was stored or third or fourth page.
I wish you all the best. Your bank is not taken for AFI. I only wish you the best that your bank is not taken for AFI, because this is the reality. I'm talking about the reality. Of course, let us also be very clear. Scale, pardon, Kota? Yeah, they follow, sir. They follow. See, NPA, they don't pass the entry, no? They don't identify it. They find a way out on saying that it is like that. They come to the auditors. Auditors, we find out and say that it is an NPA only. They come and request you only, sir, money has anyway come, sir. Why are you to classify it, sir? And next week I am going to retire, sir. Please leave me, sir. Pardon, sir? That is what is manual intervention. Once again, I am telling you, that is what is manual intervention. That is what is manual intervention. System, don't presume that it is a system flaw. System will not make mistake. It's an idiot. System is actually an idiot. It takes, idiocy in, idiocy out. Garbage in, garbage out.
So it's not like the bank has made a loss. So even if RBI has put up this, I think it's really very impractical.
You can call it as impractical, you can call it as weird, you can call it as wrong, but the regulator is regulator. That's all. I have a central statutory, he might also be looking about that. When he is talking about that, he might also raise this particular point. I make it very clear, this has happened, that is why I am telling you. And please understand, that is what RBI expects you to do. Because on that day, it is an NPA or not. On that particular day, whether it is a SM is 0 or 1 or 2 or NPA. That's all. They are not interested in talking about practical side. I am making it very clear how they have defined. And the second portion is, in the documents, the exact due dates of repayment of loan, frequency of repayment, breakup between the principal and interest, examples of SMA classification dates shall be clearly specified in the loan agreement. They have made it very clear. Once again, sir, if the loan agreement is filled up to the much extent, they expect you to fill up those items in a proper manner. What has happened is in the earlier occasions, I remember, I have gone through these norms here in 10 years before, 6 years before and all, documents itself will not be filled up. The document will be signed by all the 4 sides that the borrower would have signed because they wanted to make the correction at a later point of time. All those things are gone because in the recent time of more than 6-7 years now, the courts have started interpreting in such a manner that if the documents are not properly maintained or it is being tampered subsequently, the borrower is getting benefit. For avoiding that, they have made it very clear the loan document has to be filled up in absolute details, including the date, etc. And yeah, it requires, sir. It's required because you are doing in a printed form. So when getting signature is not a problem, but you have to fill it up and get the signature immediately. But what happens is they take the signature and keep it. After 3 years, 4 years, when they are going for the court of law, they go and fill it up. They send it for forensic science. And the inks which has been filled up that and this is not matching. There are umpty number of cases which are happening like that. So my point is, getting signature is relevant because it's a printed document. There are gaps which are available, which is manually filled up because each and every case, the document cannot be maintained at that point of time. So getting signature is okay, but getting signature is not sufficient. You have to make the corrections also in the same manner. And then third item is classification of borrowers SMA as well as NPA. That also identified as a day-end process and shall be the calendar day for which the day-end process runs. Calendar day. All those things, they have made it very, very significant and specific. So let us just read it and leave it like that. The exact due dates, once again, this has been given in the month of December 2021. Okay, a branch shall comply in respect of all the documents sanctioned on or after December 31st, 2021. This is what they have been. So now itself, in the documents which you are going to verify, it will be automatically corrected. But even if it is not corrected, you can ask for the correction to be made. So next question immediately what you can ask is, what will happen in respect of the document which has been signed before that date? That they have made it very clear. In case of loan facilities, in case of loans sanctioned after that particular date, prior to that particular date, compliance to these documents shall be ensured as and when the renewal or review has been done. What should be? They have mentioned that. I have not seen the document yet. They are mentioning, if it is, they have made it very clear, it has to be mentioned. Examples of SMA. So what they are saying is, they are giving only 3 examples. If it falls due on such and such date, if it is not paid on such and such date, it will become an SMA 0. Because they are appraising the borrowers. Because borrowers come and subsequently claiming ignorance of this fact. They are coming and claiming ignorance of the fact subsequently. So I did not know that it would have become an NPA. If it had become an NPA, somehow or other, I would have made the payment.
If it is not there, should we qualify that?
Yeah, no, this is not a qualification. This becomes
At least
the
in LFAR
documentation defects.
LFAR
documentation defects. But if that happens in such a manner that it has an impact on the NPA, then you will have to classify it as an NPA. Not that is a documentation defect. If that is SMA not filled is only a documentation defect to be reflected in the LFAR. But because of that, if there are any calculations errors, you will have to do that. And in case of loan facilities with moratorium on payment and principal, the exact date of commencement of repayment should be mentioned. What happens is, they say 6 months moratorium period is given. The agreement will be like this. When is the due date after the 6 months is importantly mentioned. And there is also a possibility, interest is also given a moratorium for 6 months and principal is given a moratorium period for 1 year. So both has to be mentioned. There might be some advances where interest moratorium is given. After the moratorium period is done, the interest is accumulated along with the principal and a fresh EMI is fixed. So which is called as a capitalized interest. So that interest is already capitalized. So it will not be coming for any of these confusions. But from that date, so if the document does not specify all this information, the documentation is defective. You can definitely look at that. And in respect of the loans given before the 31/12/2000, whenever a review or renewal happens, you have to do it. You can very well come and say, sir, in respect of term loans, where is the review or renewal? You can definitely ask about this. In respect of term loans which has been given before that by way of housing loans, etc., there may not be any requirement at all. But there is every possibility, once in 3 years, you ask for a documentation revival. At that point of time, that revival, you can ask for a fresh set of documents. This is one area. Second area, in respect of borrowers having multiple facility or subsequently availing multiple facilities, the earlier term loan also will be added in the review. That is true. All along, he has been having only a machinery loan. Now they are coming and asking for a CC limit. At that point of time, the existing limits also will be mentioned and that will be reviewed. At the time of review, you will have to have the fresh document to be done with the full details. Am I clear? So whenever after this, so you don't have to, you can also pick up couple of items. You can pick up couple of documents to examine whether it has been done in respect of the earlier items. But please understand, all these things would have been already done in the last 3 years because it has been brought in 31/12/2021 itself. After that, the branch would have undergone head office inspection. So head office inspection will be going more interested in the documentation. They could have done it. If they have not done it, we don't have to do it. But at the same time, if you pick up a couple of items and you find out there are still certain documents which have been left out, you can definitely escalate it to the central statutory because it is not going to have an impact on the provisioning norms in my opinion. But at the same time, it has to be reported in this particular item. Is that clear? So dates has to be filled up. If it is not filled up in respect of transactions after 31/12/21, it is a documentation defect. In respect of the earlier documents, whenever a revival happens, you yourself, for example, in the year, they might have given a CC account. At that point of time, you can ask, hey, he had a term loan. Have you revived the document? You can definitely ask. It is a value addition for the bank as a whole. Definition of out of order. This, there is no change, but I am once again repeating to you because it has to be understood in an appropriate manner. Out of order status, a cash credit or out of account shall be treated as out of order if the outstanding balance remains continuously in excess of drawing power or balance outstanding, whichever is earlier, for a period of 90 days. Two items has to be examined in that area, drawing power or balance outstanding. For example, a sanction ticket. Sanction limit is 10 lakhs. They have a stock of 20 lakhs. Drawing power is actually 15 lakhs. In that situation, if it is in excess of 10 lakhs itself, it will become an out of order. The sanction limit is 10 lakhs, but they have a stock figure of only 10 lakhs. 2.25% is the margin. Drawing power is only 7.5 lakhs. So any balance outstanding in excess of 7.5 lakhs, it becomes overdue. And if it is outstanding like that, it becomes an out of order. And if it is out of order for 90 days, it's a problem. Okay, outstanding is within the limit, within the sanction limit, within the balance outstanding, but there are no credits at all. Will this happen? It can happen on two or three reasons. One is real account becoming bad, that can happen. Even in case of a good account, current year only they have started giving this advance. For example, CC has been given in the month of July 2025 only. So only disbursements will keep on happening. From July 2025, only disbursements will be happening. So in those situations, there might not be amount exceeding the limit. Limit is 50 lakhs. In July, salary payment would have been made. August, September, like that payment would have been made. The balance outstanding will not exceed 50 lakhs even on 31st of March. In that scenario, only debits are there. There are no credits. This account will become an NPA. So which means what they are saying is, even in respect of CC accounts, where only given in the current year, the money has to be, credit has to be received because it has to be, an operation has to be there. The income has to, assets has to generate income for the bank. It has generated income, interest is debited, but whether it has been recovered, it is not recovered. Then it becomes a NPA. And third category is the important category, wherein credits are not there. Credits are, yeah.
Sir, if any, in the
Water.
loan sanction letter, the credit will be given after 6 months if they have mentioned. But in between 31st March, year end is there. So there will not be any credit.
Repeat, ma.
If the loan sanction letter, they specifically mention credits will be given after 6 months of sanction date.
No, the repayment will after 6 months.
Yes.
No, that becomes a moratorium case. See, that's a moratorium case. See, we are not bothered about moratorium case. We are bothered about working capital case. Working capital, there will not be any moratorium at all, madam.
Okay.
Working capital, there will not be any moratorium at all because it is done for the day-to-day operations. It is for funding the day-to-day operations, so it will not be this will not be having the moratorium period at all. If at all it has been given, for a moment let us understand it is given because it is a, what you call, take the case of a small entrepreneur who is afresh given. So in the CC account also money can be paid only after 6 months. If it is given like that, then they can be. See, as per the original sanction condition. Simple. The sanction condition has to make it very clear, sir. Yeah. They can, but the point is, sir, when they do the working capital gap assessment, there is a margin which I have to bring in. So the margin which I have to bring in. So that interest will have to be observed by my margin. So the third condition is, there are interests available, there is recovery is available, but the recovery is not sufficient to cover the interest. That is the third example. So effectively what happens is, they want to see that working capital loans as working. That's all. It has to work. There should be a debit and credit which has to happen. If it is not happening, it becomes an out of order case. Is that clear? Yes, sir. What is the time for me? 4:15. Okay, thank you.
Will the third clause can be attracted at that point of time?
I will say by way of an example. You say that April 95 debit was there, May 95 was debited, June 95 was debited, July, there was no recovery. August, there was no recovery. September, when the recovery happens, this plus the earlier items are come. That's what you are saying?
What I'm saying is, in April, he has paid a more, very large amount.
Oh, okay, you are talking about advance payment.
Yeah,
You are talking about advance
advance
payment.
payment, yes, but-
See, it is considered as a 90 days period. They are giving a 90 days period. And this 90 days period is any 90 days. It is not from 1st April to 30th June. 1st July to, it is not like that. Any day to any day, if the 90 days window is there, and in the 90 days, so what you are talking is, on April I have paid more amounts in the month of April. May, June, July, I have not made any payment. It will become out of order. Because they have made it very, very clear, in any 90 days, not that 90 days from today, it is said any 90 days. If the money has come subsequently, it will come into order. As far as CC account is concerned, one advantage is there. It can keep on oscillating between SMA 0, 1, 2, 3 and SMA, it can keep on oscillating because that is the nature of business. For example, I do a supply. All the supplies are happening in the month of March because target dates is filled up. All the collections are happening after 6 months payment. I am getting only in the month of September. So April to September, I may not get any collections at all. In the September, everything will be wiped off. But I will come to another occasion by way of upgradation. At that point of time, I will explain once again. But for a moment, let us understand. The 6 months afterwards, when I get that money, it has to wipe off all the overdues. I will come to that once again subsequently. Yeah. Sir, it is not at the end of the month, sir. It is done anywhere between 26th or 27th of every month, sir. All the banks. It is not happening at the end of the month. Let me be very, very clear. You can examine in your banks also. It is prior to that. And the last 3 days is provided as a broken period. And as far as term loans are concerned, the interest is provided from the date of sanction to the next date of sanction. Actually speaking, if it is given on 15th, from 15th of April to 15th of May, provide for. 15th of May to 15th of June, provide for. And at the end of the year, broken period interest is being provided. You can examine in your cases. There's no problem. That is not like that is not happening like that, sir. That is not happening like that. They are having a fixed date for working capital loans. On every month, they are charging 27th.
No, this 90 days, from when it is to be construed?
If it is interest, that is, as far as OCC and OD account is concerned, it is not a question of interest recovery. It is only out of order.
Out of order, I am.
Out of order. Any 90 days. This is what explanation 1.
Yeah.
Previous 90 days period referred above shall be inclusive of the day and which if I am going to see an NPA standard today, from today 90 days. Day after tomorrow if I say, from that day 90 days. Any 90 days window. So it is not on 31st of March, it is not on 28th of February, it is not on 31st of January.
Okay.
Any
From the
day
date
can
of
happen.
sanction.
Any day it can happen. The illustration which the other gentleman was telling, money has come in the month of April. April they have come and pumped in 20 lakhs. No problem. May, from 2nd of May they have come and put the money. From 2nd of May, take the case of 90 days. Let it be June, July, August. August 1st. From 2nd May to 31st of July, 90 days period, money has not come, it becomes out of order. So, any day, sir, am I right, sir? Narajan, sir? So, this any day window 90 days has been brought in by way of an explanation. So, be very, very clear, day end operation. Once again, the system is automatically identified to put it as NPA, or out of order. You don't have to bother. Only thing is, you have to pick up certain items and examine whether that situation is there or not. But one advantage as far as working capital is concerned, let us be very, very clear, my dear friends. When you do at the end of the year, on 31st of March, as far as working capital alone, this is only a, what you call, like Madam was telling, this is the only practical point which I would like to mention as far as working capital is concerned. If the balance sanction limit is 10 lakhs, and it was continuously overdrawn for a long time, and in the month of March, they have already fully made the payment, and if the payment is genuine, and the balance comes within the limit of 10 lakhs, it may not be an NPA at the end of the year. It might have been an NPA in the current year, during the year, but at the end of the year, it may not be an NPA. This is an advantage of working capital. The reason is, it's an item of oscillating nature. Here we can see, we can look at as a practical situation wherein this will not be considered as an NPA or out of order because the money has been fully recovered, provided the recovery is genuine and it is not a solitary credit. It should not be a solitary credit. Yes, sir? Enough credits. Enough credits. There is minimum interest and other expenses to be debited. See, what is the working capital loan, sir? The working capital loan is the money given for your purchasing requirements, your day-to-day working capital requirements. So whatever I have given to you, you have spent for various requirements, is not a problem. It is a funding. In respect of the funding, I am charging interest. For the funding, I am charging some commission. For the funding, I am providing inspection charges. All these items are my charges. To at least to this extent, my money has to be recovered. So money should be enough to recover the charges and expenses which have been debited to the account. Insurance, processing charges, interest, commission, all these expenses nature has to be recovered. So minimum at least that should be recovered. But please understand, when you go for an operational verification of the particular account, only if these amounts are recovered, there is every possibility this account become an incipient NPA. Not an NPA today, potential NPA. Because if the credits are not sufficiently happening, more than that, the working capital loan is generally given for business purposes. Which means business has to happen. If the business happens, money will come. What is working capital cycle? Money to money. Money goes into raw material, production happens, WIP, finished goods, sales, sundry debtors, recovery, money. This is the working capital cycle. If the working capital cycle does not happen, or it happens, money is not coming into the branch. The only way is diversion of funds. Money is going somewhere else, or he is having a bank account somewhere else. So the situation is, yeah. I'm not hearing. So, beautiful. It's a very good important question. In respect of seasonal business, please understand the limit itself will be fixed only according to the season. I'm just taking two classic examples. Please understand, my dear friends, I always talk with examples. The reason being, then only it can easily register in our mind, and all these examples are practical examples which we have been facing. Take the case of a textile fellow. Textile fellow, his maximum sales happen at the time of Diwali and bonus, and probably by way of Ramzan. These are the 3 times it happens good business. So in the month of April, May, there may not be any business at all. So what happens is, the CC limits, when it is fixed, April and May limit will be fixed as 10 lakhs, and during the season, it will be given as a seasonal limit of 30 lakhs. So in that situation, these collections and this will be automatically matching. This is how it has to be given. If it is not done like that, credit appraisal is wrong. If it is not done like that, credit appraisal is wrong. So in this scenario, you will have to ensure that the money which is being debited and credited are matching. And moreover, the turnover in the account has to be there. There should be a sufficient turnover in the account. What do you mean by the turnover in the account? Credits into the account. Credits into the, because as I was telling you about the working capital cycle, money has to be collected into the bank account. If it is not collected in the bank account, there are only 2 reasons. One is money is getting diverted, or second is the sales is a bogus sales. Sales is a bogus sales. Because for the purpose of showing turnover, they are showing turnover. Money is not going to come. One more important item as far as this CC account is concerned. When you see the recovery, when you see the operations of the account, please be careful. The credits are coming regularly and genuinely by way of checks, bills, etc. Because you are discounting the bills. Money is not realized through bills process. It is coming through a current account. It's a problem. Because the debtors are not making through the system, making the payment through the system. Either they may be paying in cash or the money is going swindled separately. So all these things are important by way of going through the account as far as the OCC account is concerned. Second, out of order. Definition of out of order shall be applicable. This is a very, very important item. Somebody else was asking about this overdraft by way of a personal nature. OD of personal nature also will be covered by the same system. Earlier this was not defined. Now they have given an explanation. Overdraft given or working capital limits given for the personal nature also will be covered by the same out of order only. Earlier what was happening is only the business people were considered as an out of order, whereas I am going by way of mortgaging my shares, I am taking overdraft against shares. I am jewelry, instead of taking a jewel loan, I am taking by way of overdraft against jewels. Those cases also this out of order will happen. It is not only the business activity, also for the personal activity. This is what is the explanation all about. I am very happy for interactions. Please. That's what I say. Individual ODs also it is applicable. Whenever it is, the sanction is given by way of an overdraft, whether it is individual, partnership firm, business, non-business, personal funds, all these things will be applicable. Loan against FDNC will not happen. If you have taken by way of an overdraft, it will happen.
Sir, my question related
The
to
reason is, once again, sir, I will complete this. Overdraft against deposit is very, very dangerous. In fact, one of the slides, I will have it in that. When you go for an overdraft against deposit, you have 3 or 4 deposits. The interest rate will be the 2% above the lowest of the deposit or highest of the deposit. Then what happens is there may be 3 deposits. One may be a deposit at 6%, one may be at 7.5%, one may be at 6.75%. You will be charged at 7% plus 2%. So in that situation, that overdraft account has to be continuously operated. There also the same thing will happen. Yes? Yes, sir?
Sir, it's relating to security of the against working capital loan. So without considering hypothecation of book debts and stocks, is it working capital loan can be given against the immovable property?
Okay, thank you. This I was supposed to tell you the next slide. The reason is, there are certain banks which give loans only on the basis of the property. For example, take the case of Karur Vysya Bank. They have a loan proposal called Vartaga Mitra. In this Vartaga Mitra, business-friendly loan. The same thing is applicable in, it was there in syndicate also. I don't know about the other banks. Asset bank working capital. In those cases, the condition is 60% of the security value will be given as a overdraft limit. If the property is worth around 1 crore, they will give us OD limit of 60%, which is 60 lakhs. Within that, they can operate. This out of order issue will happen here, but the security, drawing power will not be happening here. Sir, your question for your answer. In this case, out of order, the same concept of out of order for 90 days, not debiting, etc., it will happen, but the drawing power issue will not happen. Because the property is given as a security, there is no stock which is being given. In these examples also, they are insisting on the stock statement for once in a year. They are giving for stock statement for once in a year and financial statements for once in a year. The reason is they wanted to confirm the projections, what they have given at the time of taking the loan, and actual happening is whether correlatable or not. And moreover, only by way of verifying the stock, we can also go and verify whether the operation is, unit is operating or not. If there is no interaction at all, it's not a problem. But the advantage is they don't have to bother about drawing power, because drawing power is determined on the basis of the security, not on the basis of the stock or book debts. Your answer clear, sir? Thank you.
Sir, but is it possible that working capital loan is based on the stocks and book debts generally, but
No,
without considering that on...
It's once again, it's often practical or depending upon the borrower and the banker. If the borrower is not comfortable to go and see, I am a proprietor, sir. My turnover is around 3-4 crores, but I'm only a proprietor. I don't have any system by way of I am able to maintain the records on a monthly, day-to-day basis. I am going to go for non-tax audit, 44AD. I am going to go for 44AD. So I don't have to maintain a stock statement. I don't have to maintain book debts, etc. In the situation, for the purpose of banking requirement, if I have to maintain one employee, it will be costing me. I know what is my business. So I will give you a property. Don't ask me all these nonsenses. That's it. So generally, overdraft is given only on the basis of these items. Is a reality, correct? But in respect of small, basically that is what is called as a Vartaga Mitra, friendly for business people. Those who are not able to maintain this sort of thing, please provide this, take this money and go away. 90 days norms will come. This out of order system by way of balance, money not recovered, credits not sufficient, all these things will come. Only the drawing power item will not be there. Drawing power will not be there. Balance outstanding will be there. I'm just taking you to an example because when I make a provision explanation, before that I will go for an example. In the present given example, a loan was given in January 2022. The last installment is 2025. From January, the installment due is on 10th of every month. So January to 22 to December 22 will be 12 installments, correct? 23 there will be 12 installments. They have classified on 15/6/2023 as an asset as an NPA. Whether that is right, first question. Second question, they have upgraded it to standard on 15/2/2024, whether it is right. These are the two questions which we are going to discuss about this, because this has an impact for the point which we are going to discuss on the next slide. So every month, 1 lakh has to be paid. As I was telling you, now whether installment is recovered, interest is recovered for 3 months or not. So on 15/6/2023, they have classified as an NPA on 34,28,000 rupees. Okay. Let us not break our mind for the computation, because all of us are good in computation when the calculator is given. Now calculator is not given to you, so let us go into that. On 34/28/700, on that day, the drawing power was only 31 lakhs. So it is beyond 3 years, so it has become an NPA. There is no problem. That I am not concerned. On 15/2/24, they have come and said that, sir, we will revive the account, sir, I will pay all the amount. So at that point of time, they have recovered 13,37,000 rupees, and they said that 24 lakhs, okay, it is upgraded as NPA, performing asset. Whether this is right. For that also, you have to see the computation here. On the right-hand side, on February 2024, the ideal drawing power, that is the number of installments should have been recovered out of 48 lakhs, 26 lakhs should have been recovered. So the balance outstanding should be only 22 lakhs. Instead, the balance outstanding on 28/2/24 was 24 lakhs, which means they have overdrawn, that is not overdrawn, it's a term loan account, they have not paid more than 3 installments. Subsequently, they have come and brought down the amount to less than 3 installments. When it is becoming NPA, when it is in excess of 3 months. Once it has brought down within 3 months, they are classified as a standard asset. This is the problem. Is the solution right? Yeah. Within the same financial year, it has happened. I'm only asking you whether the upgradation done on 15/2/24 is right. How many say yes? How many say no? No? Others don't have answers. See, I only pray, others are awake. It is not right. Upgradation on that day is not right, because upgradation can happen only when the entire arrears is cleared. Once an account is classified as an NPA, before becoming NPA, for example, if it is in SMA 0, SMA 1, if I pay only that portion of the amount, I am okay. But once it has slipped down into NPA, if it has to bring back to a performing asset, I have to clear the entire arrears. It should not be even SMA 0. So, as on 22/2024, the drawing power should have been only 22 lakhs. Overdue is 2 lakhs. If the balance has, the money which has been paid on that day is 15,37,283, then the account could have been upgraded. If it is only 13,27,000, it should not be upgraded. Is that clear? So, the point which I am trying, pardon, sir? Very simple, sir. Very simple. Because I have given you the solution. No, sir, please understand. Please, it is all possible because they give a statement of term loans due as on 31st of March. They give a statement of balance outstanding and drawing power on 31st of December. In that it has happened. Whenever an upgradation happens, you are supposed to verify, because the LFAR, they have added one more statement in 2000, one more question in the 2023 LFAR. Whenever an upgradation happens, is the upgradation according to the RBI norms or not? So, no, that's what I say, sir. Same day only they ask, see. Definitely, sir. They are supposed to give you, sir. They are supposed to give. Sir, simple, sir, simple. Every month they will be having SMA 012 norms. NPA declaration also will happen, because whenever an NPA is identified, interest is reversed. Whenever an NPA is identified, interest is reversed. One particular account, suddenly there is an interest increase, etc. Suddenly there is an interest increase. Obviously, you will be able to find out some gimmicks has happened. Whether it has to be waiting only for gimmicks, need not be. Definitely, by way of an observation in respect of large term loans, you will be able to understand this. Whenever an upgradation happens, you have to necessarily see whether the upgradation is according to the RBI norms or not. So let me go into the provision of what is upgradation of accounts as far as RBI norms is concerned. Yes, sir. Yes, ma'am. Practical, madam. That is practical. Madam, only lighter when I said, don't worry. The restructuring account is syllabus after 3 slides. Now itself you are asking, but I don't mind, I can tell. See, whenever an account is getting restructured, the system is itself totally different. Once a restructuring happens, it is one-time restructuring or second-time restructuring happening, it becomes an NPA, first of all. Once it becomes an NPA, it has to get performance and come to the standard for a period of 1 year from the date it is being given the, restructuring norms. Whenever restructuring norms is being given and they are given monitoring, moratorium, etc., from that it has to happen for 1 year. That is different from this. Here, it is not a restructured account, it's a general account. Normally, it has become SMA 0, 1, 2, and it has become an NPA. Whether I can upgrade it, I can upgrade it only if the entire area is cleared. Let us understand this. I will come to that subsequently. What happens now, madam? On February 2024, it should not have been upgraded. It should not have been upgraded. They have upgraded. By 31st of March 2025, if it has been fully, arrears has been cleared, I don't have to bother. But you have to talk about in the LFAR. But if 31st of March also it is like that, then automatically, because what happened now, madam, when they upgraded, they wouldn't have provided the interest fully also. There is every possibility. In fact, there is also, these are all the places where manual intervention can happen. Please understand, manual intervention happens in these sort of situations only. So, whenever manual intervention, that also you can ask for an audit trail. From that, you will be able to ascertain something can be definitely worked out about that. So, what is an upgradation? Loans classified as NPA. Yeah? Same slide?
Balance amount is there. Till 31st March, they have not paid the amount. Then whether it will be classified as NPA or not?
If it is not paid, it will be an NPA.
Only the balance part, only 2 lakhs they have not paid, no?
NPA only. NPA, definitely it's NPA. NPA. Upgradation is wrong. In this particular question, I am talking about one question only, whether upgradation is right. Because I am going to talk about this particular paragraph. Chapter 3, paragraph G69 talks about loans can be upgraded in standard only if entire arrears of interest and principal is being recovered. This was also available in the guidance note earlier. Earlier, banks were questioning like this, sir, it's not like that, sir, it can be managed like that. No. Guidance note was very, very clear. Both has to be only. We can talk, quote about that guidance note in that area. So, in this situation, similar to what she was telling, whenever an upgradation of accounts is classified as NPA due to restructuring, non-achievement of DCCO, etc., there are some restructuring happens at the highest level for restructuring because of DCCO. I hope all of you know about commercial operations, like, or let us talk about some metro rail project. It is delayed for some specific reasons. In those cases, restructuring will happen, which is done according to the norms only. At that point of time, they give moratorium, they will give additional financing, they will give additional time, etc. Still, it will be considered as a standard asset. So, in those cases, whenever this sort of resolution of stresses has happened, that resolution has to come into the picture, where the instruction specific therein has to apply. The provision which I was telling you will not apply. What I have told you will not apply in that. That whatever be the resolution which has been given, that will apply in respect to it. That also they have given in the para G70. Income recognition in respect of income recognition policy for moratorium on payment of interest. All of you know moratorium. I was indicating about this a couple of few slides before. Whenever a loan is given, there is also an opportunity that I give loan. Interest is also accumulated up to a particular level and then given an EMI. Best example is education loan. In respect of education loan, interest is getting accumulated, and at the end of the 4th year, the interest and principal will be added, put together, and a fresh EMI will be fixed from the 5th year onwards, or 6th year onwards. 1 year holiday period will happen, and from 6th year onwards, the payment will be made. But the 5th year onwards, interest will be regularly paid. This is the normal system happens in case of education loan. 4-year loan, 1st year loan will be given, 2nd year one more principal, 3rd year one more principal, 4th year one more principal. At the end of the 4th year, all the interest will be accumulated, added with the principal, and EMI will be fixed. That EMI has to be paid from the next month onwards. This is what is happening in respect of education loans. In this sort of scenario, how you have to recognize the interest? In this case, you should not come and say, sir, interest is not paid for 3 months, so I have to classify it as an NPA. No. In these cases, interest will be recognized on accrual basis. Chapter 6, para E 139 is making it very, very clear. In respect of these items, interest will be recognizable on accrual basis in spite of non-recovery. Because the plan of this loan itself is that interest will be accumulated along with the principal and it will be capitalized and EMI will be fixed. Next question, in the same case. If there is a loan is given, it becomes an NPA after that, what will happen? Even in that situation, interest to the extent of not recovered after that EMI fixation only is to be reversed, not the earlier interest. I am making it very, very clear. 10 lakh is the loan. I have been providing interest over a period of time running to 2.5 lakhs. Total amount is 12.5 lakhs. I am fixing an EMI for 12.5 lakhs. 12.5 lakhs will be divided as an EMI at 12,500 rupees for 100 months or whatever it is. I am not going into the arithmetics. An EMI is fixed. From 5th year onwards, the payment is being made. After 6 months, he is not making the payment. So in that situation, this account will become an NPA. Correct? So once an account becomes an NPA, interest which is charged after that non-recovery period, that alone will be reversed, not the interest which has already been capitalized. Because what is interest capitalized already is part of the principal and hereafter it will not be reversed. Because I am going to talk in one of the other slides, interest to the extent not recovered has to be reversed fully. Then you shouldn't come and ask a question, what is happening here? So whenever a moratorium is happening, when the moratorium is given for interest and it is added with the principal and EMI is fixed, interest need not be reversed. It can be recognized as accrual basis. Once that account becomes an NPA, after it becomes an NPA, the interest charged after the date of fixation of EMI only has to be reversed if it is not recovered, not the earlier interest. Is there any doubt in this? At once I have made it point, the first issue itself, very good. NPA norms. We are going to the NPA norms. No major changes. Same uniform norms for 90 days as far as all the 3 accounts are concerned. CCOD, term loan, bills discounted. Aggregate loans continues to be on crop seasons. I was explaining to you about crop seasons. I am going to have some few examples on this crop loans. Interest principal outstanding for more than 90 days. This also continues to be the same thing. They have only given an explanation. Upgradation, I have already told you. The loan accounts classified as NPA may be upgraded only if the entire area is cleared. I have given an example itself. Now, the working capital loan, where irregular drawings are permitted or allowed in the account for a continuous period of 90 days, even though the unit is working well, borrower's financial position is satisfactory, it will become an NPA. This is the example which they have mentioned very, very clearly, because normally what we tend to understand is account is regular, only for few days it has been permitted, if it has been allowed as overdrawn, they have recovered subsequently, they have rectified subsequently, and the borrower is also good. Why do you have to classify? But the section says you have to classify it as a NPA only. Bills, all of us know, bills outstanding for more than 90 days, it will become an NPA. Here, you have to be very, very clear. When the party has bills facility and CC account and term loan account, any one account becomes NPA, everything will become an NPA, except few exceptions that I will come at that point of time. This is another item which has been brought into the definition itself. Whenever an ad hoc regular limits have not been fully reviewed, renewed within a period of 180 days, it will become an NPA. This is the only place where they talk, instead of 90 days, they talk about 180 days. Because the additional 90 days is given for the benefit of the branches to ensure that they get the documents, do the revival, the renewal, etc. Immediate question. Sir, is short review okay? Is limited review okay? Okay, sir, short review is done. Whether this 180 days is from the end of the short review or from the day of the first short review. RBI is very clear. The date of expiry of the sanction, from that day, you can do as many reviews as possible. Whatever be the review, within 180th day, you will have to do the final renewal only, final sanction. Same way ad hoc CC. Ad hoc limit is given. For example, for a season business, they are saying, I have to go through the valuation process, etc., as far as the property is concerned. So I am giving an ad hoc facility until the entire procedure happens, because the limit is going to the head office level. The transaction takes longer time, so I am giving an ad hoc facility of 25 lakhs. Once a 1 crore loan is given, this 25 lakhs will be absorbed into that. This is an ad hoc limit which has been given on 1st of January 2025. That should be approved by way of regular limit by way of 1/4/2025. If it is not done, this ad hoc limit will become NPA. Once that becomes an NPA, the regular account also will become an NPA. So please understand, renewals, I'm sorry, I said 1/4, it is not 1/4, 1/7, 180 days. So 180 days norms is given, that is everywhere it is 90 days. In respect of agricultural loan, it is crop seasons, and in respect of these accounts, 180 days. Other than that, there is no different dates at all. You don't have to bother at all. So 180 days means 6 months. No, it is not 6 months exactly, it is 180 days only, please understand. For our understanding, we take it as 6 months. It is 180 days. So if it happens to be a leap year, it can stretch a bit. But if it is not a non-leap year, number of days will come faster. So 180 days, if the money has not come, renewal has not done, it has to be classified as an NPA. Once again, when you start the work itself, you can ask the people to take the working capital limits. This comes on only working capital. It does not come under term loans. You can ask your people to take the list of working capital advances. When was the last sanction given? That you can take down in the list. From that, you can very well calculate whether the renewal has been done or not. The reason is, at the time of renewal can be full only on the basis of audited financial statements. That is also given in the LFAR and also the RBI circular. So renewal happens only on the basis of the audited financial statements. So please ensure that 180 days is strictly monitored and no leeway is given. Sir, I have approved it, sir. GM was not in station, sir. If he was in station, it would have been provided. But whether he is in station or not, we don't have to bother. Let us be thinking on let us save our skin. We will not be bothered about the BM skin or RM skin or ZM skin, because they are not going to be your friend day after tomorrow. Yeah. System control is there. System, once it is expired, it will automatically flag it to SMA 0. It will flag it to SMA 0. But only thing is that 180 days date, who is going to monitor is a billion-dollar question. At that point of time, if they go and manually intervene and change the date, you are in a problem. So we will not be able to determine that. See, if you are going to see larger accounts in this current year, in those cases you will be definitely seeing the CC documentation. At that point of time, you will be able to understand. Even though it is a last year document, you will be seeing that, because this document has not been renewed. From that, you can be able to ascertain when is the actual due date of renewal. From that day, 180 days it has to happen. So you can very well examine whether any accounts which is due before 2nd of October 2025 has been renewed or not. If it is not renewed, it will become an NPA. That will have to be very, very clear. Agricultural advances, definitely is a problem. We are not able to solve the problem in all the places. Many places we have an issue, because crop season they are giving an explanation, SLBC gives an explanation, some places there is a famine, some places there is a drought. All these things will happen in particular segment. So what do? Let us understand the concept. Once we understand the concept, we will jump over to a particular slide which talks about our guidance note. Guidance note, page number 422 to 424 of guidance note of Institute of Chartered of India makes it very clear. They give a table in respect of all types of advances, short term, long term, Kharif Yatra, Datyatra, Ditya, all these things they are giving, including agri-allied activities. So in that, they are giving the calculation that we will see subsequently, but now we will understand. So as far as agriculture advances is concerned, you need not bother about 90 days, you need not bother about 180 days. You have to identify whether this loan, what is the crop season. If it is a short crop season, short duration crop season, they will be becoming liable for NPA only after 2 crop seasons are expired. So first of all, we will have to understand what is the crop season, when it is starting, when it is ending. From that day, we will have to go for 2 crop seasons. 1 crop season may be 3 months, and after that 3 months, 6 months, 6 months, 6 months, 1.5 years can happen. In case of a long-term duration crop, I am taking for a rough figure, 1 year and 3 months, another 1 year and 3 months, one term will happen. So if the item becomes overdue and remains overdue for 2 crop season, if it is short-term duration crop, it will become an NPA. In case of long-term duration crop, if it remains as overdue for more than 1 crop season, additional crop season, then it will become an NPA. Sir, who has to identify all these things, sir? Let us not bother about this. The branch is supposed to identify all those items. But only thing is, you can go through that and examine and put it the information in the particular table which has been given by the institute itself, you can definitely follow that institute very ceremoniously, methodically, and close your eyes and see. Because once you go drive according to this, nobody else is going to come and issue a notice to you or issue a matter in that, unlike our accounting standards. Because here they have given classic example. Kharif crop, Rabi crop, both of them are coming under short-term duration crops. In certain places, there are 3 crop seasons also available. There are in fertile areas, they do, in Tamil we call it as Moonu Bogam. So here also it will be available in certain places where this fertility is there, they do 3 crop seasons, 3 months, they can do that also. All those things will come under either Kharif or Rabi, and long-term duration crops, examples are sugarcane and banana. So they have given classic dates. Sanction is given on the period between 1st of September, April to 30th September 2020. Harvesting time is September 2020. So the crop season is from 1st of April to 30th September. That is the crop season. Repayment due date is 31st of December 2020, because they have given September is the end of the crop season. From that day, 3 months is given for the purpose of payment. That is the normal norms as far as agriculture is concerned. So 31st of December 2020 is the due date. So if 31st of December 2020 is due date, money is not paid on that day, it will become irregular on that day itself. It will become irregular. It will not become an NPA. I will go to the next slide and come back once again. First crop season is ended on 30th of June 2021. Second crop season is ending on 31st of December 2021. So once it has become overdue on 31st of December 2020, it will become NPA only on 31st of December 2021. So we are given 2 crop seasons. 2 crop seasons, every crop season will be calculated like this. If you are understanding this, I will go to the next level. If you are not understanding, I will have to go to once again this example. The loan is given on a period from April to, this 1st of April to 30th September is an example which they have given. Whatever the example which you are having, you go and put it there. And on that basis, you can do it. If the loan has been given on 6th of September and the due date is fixed as 5th of January, from 5th of January, you will have to calculate. Okay, let us not bother about that. The due date will be fixed. Due date is normally when it is happening. Harvesting will happen uniformly in all the borrowers at the same point of time only, because that doesn't change. It is in the same state, it will be like that only. So 30th September is 31st December, 30th September is the harvest, 31st December is the due date. Once 31st December is due date, I have 2 half years, because each and every crop season, and then it becomes 31st December 2021 only, it will become an NPA. Same way for Rabi season also. Now we will go to the long-term duration crop. 31st of March 2021 is the repayment due date. On that day, if the money is not coming, it will become an NPA. I mean, it will become an overdue. Once it becomes overdue, on 9th column you can see, 31st of March 2023, it will become an NPA. And in case of banana, it will become 31st of December 2022, it will become an NPA. The reason is only same thing here. 31st of March 21, here you get a period of 31st of March 2023. You can have one more crop season. Is that clear? This I have not invented. It is a lift from the guidance note, page number 422 to 424 of ICAI. You can pick it up. You can convert, that is in PDF file. You can convert it to an Excel sheet. Whenever you go for a rural branch, you pick up the dates, put it in that particular date, do the equation, and then you can do it. If you are good in computer, you can do it. I am not good in the computer. I only pick up all these things and give it to my team. They put it in an Excel sheet, they do manipulations and give it. They can do manipulation. We can do manipulation because we are doing for the purpose of audit. The same manipulation is not accepted to be done by the branch management. That is what we are looking at. We can do manipulations. Is that clear? So short-term duration crops, 2 crop seasons. Long-term duration crops, 1 crop season. Additionally, that is, it can remain overdue for 1 year, and another 1 year it is eligible for long-term duration crops. This is regarding the allied activity. There also they have given an example. The allied activity, they don't give this crop season, etc. Only within the 3 months it will become a NPA, compounding date, due date. And here I want to talk about this interest subvention. We also give a certificate in respect of interest subvention. For that, you can utilize this example for the purpose of interest subvention also, because we are giving a certificate. Many of us are not even computing that. We have to do a test check on that area, and then only we will have to give a certificate. That is available. Its computation is done at the branch in a proper manner only. Only thing is we have to apply our mind and examine whether what is eligible is being brought in there or not. These items are applicable in respect of jewel loans given for agricultural purposes also. Please understand, all these benefits are available in respect of jewel loans given for the agricultural purposes. So once again, you will have to come and ask whether agricultural loan is given for, jewel loan is given for agricultural purposes or not. How will I know? RBI has said up to 2 lakh, you don't have to ask for much question. If you consider I'm a farmer, you can give a loan. But any items in excess of 2 lakhs, you have to ask for this justification, information, etc. by way of what is the acre they are cultivating, what is the, all these things, you will have to take it and then give it. But be sure, but most of the branches, they will not take more than 2 lakh loan, because if at all they take 2 lakhs and more than loan, they will take the next 2 lakhs in their wife's name or brother's name. So you don't have to bother. But please understand, because it has an impact. Once it is an agriculture loan, it comes under priority sector. When you do a sectoral classification, it comes under priority sector. So please be very careful about this. And moreover, normal jewel loans, period is 1 year payment. In case of agriculture jewel loans, you go according to the crop season. So please ensure that jewel loans, agricultural, are appropriately identified as an agricultural loans. Next is, as far as working capital advances, there are 2 more items which will be having an impact on the NPA identification. One is stock statement should not be more than 3 months old. The reason why they are saying is, once a stock statement is not given, the drawing power for the next month is not identified. It becomes a 0 if the stock statement is not given. So if 3 months stock statement is not given, then it will become a NPA on that time itself. For example, in the month of October, stock statement is not given. November, December, January. Until then, the drawing power will become 0. In February, it will become an NPA itself. Is that right? Am I clear? Am I sounding sense? So as far as stock statement is concerned, we have to ensure this also. When you go for the audit, you can ask for the working capital limits, dates expiry, you can do with it. Along with that, you can ask when is the last tax statement received. For the purpose of NPA norms only. But for the purpose of LFAR, you have to necessarily see whether stock statement is regularly received or not. For the purpose of NPA norms, you can see the latest stock statement. If it has been received from January or February or December, you can leave it for the purpose of NPA norms. But for the purpose of LFAR, you have to generally give a report on the basis of the actual submission of stock statements. Solitary and few credits in the account before the balance sheet date, which I was telling you earlier itself, money, there was no transaction at all. Suddenly in the month of February or March, they come and pay one small amount here and there and say that it is a regular account because I have covered the entire interest. In this scenario, the bank is giving the authority to the auditors. The solitary of few credits, the auditors may classify it as an NPA. It is not that they have to compulsory. Here once again, the branch management will not do, because as far as they are concerned, money is recovered. Interest has been continuously debited for all the 12 months. In the month of March, money has come, so it is coming within the limit, they will not touch. But you will have to go through the account. If it is a solitary or few credits at the end of the year, please examine whether it is an item which is identified as an NPA or not. Correct. Only if stock statement is not given, you don't have to classify it as an NPA. But if it is not received for 3 months and above, you will be under compulsion because drawing power is becoming 0. See, once I'm not because stock statement is given, I'm not classifying it as an NPA. Once stock statement is not given, my drawing power becomes 0. I go to that 90 days clause once again. If the account is in excess of the sanction limit or drawing power for continuously for 90 days, it becomes an NPA. What is drawing power? Drawing power is on the basis of the stock statement. Stock statement is not given, drawing power is there. Drawing power is becoming 0, my balance outstanding is in excess of the limit. It's a chain. It's a chain and link. Yes, sir? If the stock statement is? On 31st of March, it is regular. You are making the 31st of March regular. How do we talk about it? In between, it is not coming. In the LFAR, you can verify. LFAR, there is a place where whether the stock statements are regularly obtained in respect of all the borrowers, there is a question. In that, you can mention that in respect of the following accounts, stock statement is not regularly maintained. Review and monitoring. In class number 5C, it is in review and monitoring supervision, they are asking that question. There you can mention about these particular classes. Once again, any 90 days, sir. Once again, any 90 days. For the purpose of classification of MPA, we are supposed to bother about the end of the year only. See, once again, if they have not identified it as NPA during the current year, that is, for example, May, June, July, three stock statements have not come. August it has come. It would have been regularized. June, July, August, September, October, like that it has not come. In the month of October, it would have already become an NPA. If it has to be becoming a performing asset, once again stock statement has to be obtained. Here, that regularization as a standard account will not happen here. What is irregularity? Stock statement not submission only. If the stock statement is submitted, it will become automatically irregular. In case of the other items, the entire arrears has to be cleared. Here it is not arrears clearance, only the irregularity has to be rectified. So 90 days is any day per the period. Yes. Sir, it is a dangerous account. It is a dangerous account. You can very well identify it as potential NPA, but you don't have to classify it as an NPA because the stock statement has been given. One more item what you can be very cautious is a stock statement prepared and submitted mechanically without any application of mind. Just they say stock of raw materials, accessories, etc. 1 crore and 10 lakhs. We are not going to agree. Yeah, once it's a large account, definitely stock audit may be there, or a chartered one may be there. We can ask for a certification from the chartered accountant. We can take additional precautions to ensure whether the stock statement is genuinely given or not. Incidentally, you can see for the last year audited financial statements, whether the stock statement is coming on the same line or not. I'm talking about March 2025. Audited financial statements will be available with the branch. On that basis, you can examine. Once again, you can very well ask, sir, audited financial statement is not there, sir. It's only a, 44 AD account. So stock statements, the financial statement is not there. Please understand, for working capital limits in excess of 25 lakhs, whenever a loan is given by the bankers are supposed to insist on the audited financial statements, number one. Audited financial statements means a financial statement duly audited by a chartered accountant expressing an opinion of true and fair view along with the UDIN. That is what is called as audited financial statement. Any other financial statement certified by a chartered accountant as true and correct or found and correct or extracted and found correct is not audited financial statement for the purpose of banking requirements. So please insist on audited financial statements along with the true and fair. If the tax audit report is there, that itself is sufficient report because it also gives the expression of a fair opinion. Yes, Swata? Stock? True. Even a stock is certified. Any attest function be a chartered accountant, if it is without UDIN, it is of no use at all. It is something like a pen without a cap. I'm sorry, fountain pen without a cap. Nowadays, ball pens are without a cap only. Fountain pen without a cap. So it's of no use. You should not. Yeah. Stock statement, book dates, etc. And moreover, if the stock statement is given, they should also say whether obsolete stocks are identified. Because if they give us just a stock statement, all these things are stock available at the branch and they sign it, that is not sufficient. We have to find out whether obsolete stocks are there. They have to give clearly whether any stocks are unmoving, non-moving for a long time, whether it's the recent stocks level, purchases are there. All these things has to come. Unpaid, whether unpaid stock is there, whether creditors are there, that also they have to mention. Because to the extent of creditors are there, the stock is not your security at all. I hope all of you will understand this particular item. Even though the stock is hypothecated to the bank, and Form CH1 has been filed with the Registrar of Companies, even then, rights of unpaid seller comes over the banker's requirement at the time, not at the time of liquidation, on a day-to-day basis. Today, when the company is running, rights of unpaid seller is prior to banker's right. In case of liquidation, banker will get the priority because he is having a secured asset. So, when it is a running account, please ensure that the creditors are being properly identified and only paid stock is given as against the loan from the banks. We will go into the next item, which is called as resolution of stressed assets. Large branches will definitely have this sort of resolution of stressed assets. This is only in respect of resolution happening in respect of DCCO, etc. So, this circular is a shorter circular. All of us have to read through that. But only branches which are having more than 100 crores and 200 crores advances, there they may be having a situation. What is the sort of business activity? Can be a bridge laying, can be a hospital. They have given list of items which are eligible for that benefit by way of delay in commencement of commercial operations for specific reasons. Approval has not come, building approval has not come, the acquisition of land has not happened. Like that, they have some tolls. All these items, DCCOs can keep on getting extended. In those cases, restructuring can happen, resolution of stressed assets will happen, and the account will continue to be classified as standard. the accounts will be continuing to be classified as standard. What do you mean by restructuring? They have clearly explained in this provision. Restructuring shall mean an act in which a bank, for economic or legal reasons relating to the borrower's financial difficulty, grants concessions to the borrower. The concession can be anything. It will come into the next slide. But this is different from restructuring. Of course, the second colored item is not RBI circular. It is my opinion and interpretation also. It is different from restructuring or modification done as a group. When a particular area is becoming drought hit or famine hit or flood hit or corona hit, in those cases, they give a general circular. Those general circular and this circular is different. The general circular, we only pray this sort of general circular will not happen again and again. In COVID-19, we had sufficient issues. Subsequently, it has not happened. So, in case of restructuring happening, whenever a concession is given to a specific borrower, we have to talk about these items. What is that restructuring and what are all the concessions which they can happen? The restructuring involved normally towards payment period is extended, payable amount is extended, rate of interest is given, concession is given, moratorium is given, anything like that can be given. So any modifications in the original terms and conditions because of a specific requirement, it is called as restructuring. But general restructuring happening, for example, there is an education loan which has been given for a doctor. He has not passed the MBBS. A very good doctor, he is going to be a very excellent doctor because 4 years course he is doing in 8 years course. Ultimately, bank will be finding it difficult to recover the money. In those cases, they come and say, sir, I have not cleared, next year I will clear. So next year onwards, we'll make the payment, give me a 1 year holiday. That will come as a normal restructuring. That will not come under restructuring. So in those sort of restructuring, the standard account will become automatically NPA. Because whenever a restructuring happens, they are making it very clear, the account will be downgraded. So once it is downgraded, normal procedures will happen in case of NPAs, etc. But whereas in this sort of restructuring, it will not become an NPA, it will continue to be a standard asset because it is given for a specific purpose to ride over the financial difficulty because of the legal reasons. What are all the items which will have, apart from these three items, what are all the other items which will happen in case of restructuring? Because all of these things we will have to examine. In case you fall into a larger bank account and in that there is a restructuring happens, you will have to ensure whether these norms have been followed or not, both for the purpose of NPA as well as for long form audit report. Rollover of credit facilities can happen. That is, whatever they have given as loan for a specific period, that will be rolled over for another 3 years. Sanction of additional credit facility. This money is not giving because of escalation cost. Money has, the project has overridden cost. So I want an additional amount that they can give. All these things are available. RBI has given this circular, has given this permit to the bankers to give this. Whether they can go on giving like this, that nobody can determine. But they have given the scope for availing that the branches have to make their own assessment. Release of additional funds for an account in order to aid the curing of default. Whenever there is a default, for clearing the default, they can give a loan account. Normally what happens, when a loan is there and it is becoming an NPA, you give additional loan and settle this account. It is called as window dressing. That is called as window dressing. Here, window dressing is permitted. Because this is a specific purpose. It is a specific purpose agreement which has been done by the Reserve Bank of India. Enhancement of the existing credit facilities. Whatever be the working capital limit given, it is extended so that the drawing power issue will not happen. Compromise settlements. To the extent of so much amount you can make one-time payment, all these things will be overcome beyond 3 months, whatever it is. All these things are forming part of restructuring. So what do you do in case of restructuring? We are bound to see the restructuring sanction ticket which has been originally assessed. We have to go through the assessment which has been done properly, and on the basis of restructuring sanction, whether the system is implemented appropriately. Because the question itself in the LFA states that wherever restructuring happens, has the system and procedures restricted by the Reserve Bank of India and the sanctioning authority has been properly followed or not. We are supposed to give it to the LFA and go. Beyond that, it will not happen. Whether here also, this also can become an NPA, this can also become an NPA. There is no problem at all. When is the implementation completed? Because we have to know when the implementation is completed. Because a restructuring happens, it is not going to happen in one day. The restructuring, because it's all large accounts, it may not be one banker, it may be multiple bankers, all of them have to do the documentation, etc. So they are given time for completing the implementation. All related documents, execution of necessary documents is done by all the lenders. First step. Next is new capital structure, because whenever bank is going to compromise, whenever bank is going to waive some interest, whenever bank is going to compromise on their levy which is there, they are giving some yield. They expect the management also to give some yield. You increase your capital. You bring in further funds from some other sources. You generate from other sources and bring it here. Then that is also has to be brought in. And it has to be reflected in the books of the accounts of the borrower. And it has to be certified by a chartered accountant also. And borrower is not a default with any of the specific. Once all these things are done, and he should not be a default with any of the lender. Once he is a default at any of the lender, once again this also become a NPA. Until then, this account is considered as a implementation done. Why this is required? Once again, why this is required? Because once implementation done, after that for a specified period, it will be like this. That is, resolution plan has to happen. On that basis, there should be 20% of the amount which has to come. Until then, this is called as implementation period. We will leave them freely. Once that is not happening, it will become an NPA. We are not much bothered about these large accounts because it will happen only in respect of the largest branches. If you have any specific question at the time of your audit, you can definitely write to me. I will be able to explain to you. But please understand, this is done with umpteen number of heads sitting on that. Regional office, zonal office, central office, and there is a rehabilitation cell in the head office that will sit to that and then only look at that. It is not that easy job, so you don't have to bother. But we are supposed to bother about MSME restructuring which is happening, which is given in the second level. That is up to 25 crores of advances. Wherever loan is being given, they are giving a specific period. And the specific period up to which it will be considered as a performing asset is the first payment of interest or principal, whichever is later, is given. This is another important issue. A loan is being restructured. It is becoming classified as substandard also, and the date is given as 1st of January 2025, and they are going to be given a holiday period of 6 months for the interest and 1 year for principal. When the account can be upgraded or implementation is completed, when it can happen? 1/1/2025, restructuring happens. Holiday period for interest is given up to 36/2025. Principal starts repayment only from 31/2025, 31/12/2025. So 1 year from the end of the later transaction, which is second moratorium principal. So only on 31/12/2026, the specific period gets completed and they will become a performing asset. So they, if it is, for a moment, let us understand a case has been given on for January 2025. June 25 onwards, he is regularly paying the interest. Immediately, they cannot recover it as performing asset, and they cannot upgrade it, give additional loans, etc., which is not allowed because 1 year from the end of second moratorium, very, very important, 1 year from the end of the second moratorium, then only it will be allowed as a deduction. So satisfactory performance, it has been defined. That is once again period of 1 year, whichever is later. Please understand, in case of working capital, it is once again 30 days it has to work properly. Another 30 days it has to work properly from the date of the sanction. I generally don't talk much on the restructured accounts because it will come only in days of large advances. Out of this crowd, maybe 6 or 7 charter accounts may be coming into the transaction. In case if you have any issue at that point of time, you can raise that point, we can answer. If you have any specific question on any of these interpretation, I am willing to answer now itself. I will go to income recognition. I have another 15 minutes. I will go for income recognition. All of us know income is based on recovery in case of NPAs. All the other accounts accrual basis only. In case of NPAs, it will be recognized only based on recovery. But that will not be applicable in respect of LICs, NSCs, KVPs, etc. Even if it is not recovered, it will be considered as an income provided margin is maintained. Provided margin is maintained. Where that margin will not be maintained, as I was telling you in the earlier case, overdraft accounts. For example, I have a deposit, I take a loan, my deposit rate is 7% and my loan will be 9% and margin will be maintained. Because 7% interest is being created, 9% is debited, only 2% will be an impact, there will not be an issue. But I have 3 deposits, one deposit is higher rate of interest and other deposits are lower rate of interest, then my interest rate will be higher. So I will be having an impact on that area, number 1. Number 2, third item, third party deposit. Whenever I have a deposit by my brother, sister, cousin, etc., that deposit I can take a loan. interest rate will not be at plus 2%. Interest rate will be normal overdraft account which is going to be there. In that situation, that difference also will be. Yes, sir. I thought the discussion was heated. Actually, I am also feeling that suffocation. The AC can be slightly improved, correct? I thought it is because of the heated discussion is happening like that. Now only I understand everybody is feeling like that. So this is second place where there is impact is there. One more item, there is a remote possibility. It is a fixed deposit. Interest is getting credited to the SP account. And the interest on deposit, interest on overdraft is getting on debited. Then also the margin will get depleted. So whenever the margin is getting depleted in respect of deposits, interest cannot be recognized. Otherwise, interest on deposits can be recognized on accrual basis. Reversal of interest. Having talked about interest levy, etc., we also have to see the reversal of interest and other income. Once an account is identified as an NPA, whatever be the interest should not be charged, first of all, from that day onwards. So whatever has been interest charged in this current year, if it is not required, it will be reversed. But what is very, very important as far as this norms is concerned, once an account is identified as NPA, even the interest or other income which has been recognized in the earlier years, if it is not required, that also has to be reversed. This branch will not be automatically doing because that capacity is not available in the system. So whenever an account is identified by the NPA, by the branch as an NPA, please check up whether interest has been reversed in respect of the earlier years if it is not recovered. Whether it is possible to be, sir, two questions can happen. Sir, if it has not been recorded in the last year itself would have been identified as an NPA, sir. Why are you bothered about now? Please understand, we are all going on test check basis only. We are not going to cover 100% of the advances of the branch. So to the extent of advances verified only, we would have classified as an NPA. Same thing would have happened in the last year also for the earlier auditor. So there is every possibility that there is an item which should have been classified as an NPA in the last year and interest should have been reversed up to that extent. That might be identified as an NPA in the current year. So wherever interest is not recorded in respect of the earlier years has to be reversed. How do you identify, sir? Only by manual calculation has to be identified. Easy shortcut routes. In respect of working capital loans, whatever be the balance limit outstanding, let it be 10 lakh and interest has been accumulated over a period of 2 lakh, 3 lakh, etc. The entire amount we can reduce it. It is easier. In case of term loans, you have to identify what is the drawing power, ideal drawing power as on today. For example, the last payment due date is 31st of December 2026. So from 31st of March 2026 to 30th December to 9 months installments should be there. Retain the 9 months installment on all other items you reverse to the income account. That's all. This will solve the problem, except in respect of loans which are capitalized, interest capitalized along with the interest. There, once again, I cannot reverse that interest. Is that clear? First item I would like to mention is very, very clear. Interest for the current year will automatically be reversed by the bankers themselves. You don't have to bother because system automatically checks up once it is identified as an NPA and flagged as an NPA, interest is reversed to the extent not recovered. But in respect of those cases, whatever the interest debited in respect of the earlier periods, it is not 1 year, earlier periods has to be reversed by way of a specific entry. All the banks give to which account it has to go. One bank may say interest not received, one bank may say INC, one bank may say as interest suspense. There may be names by each and every bank. Identify that it will be given in the your audit instructions. On that basis, you can do that. As I told you in the earlier case, loans on the moratorium payment of interest, corresponding interest accrued during the month need not be reversed, as I told you. In respect of NPAs, fees, commission, and other income also, if it is not required, that also has to be reversed very clearly, if uncollected. If it has been collected, I don't have to bother. If it is uncollected, that also has to be required. So let us, we have seen what is asset classification. We have seen the CC accounts, ODs, etc. All those items are performing. Once it is becoming performing, once an asset is not generating income, it becomes an NPA. NPA, there is no major changes, sir. It is substandard, doubtful losses, 3 categories. Once an item becomes an NPA, for 12 months it will be in substandard. 12 to 24 months it will become doubtful. 24 to 48 it will be doubtful 2. 48 afterwards, it will be only doubtful 3. Doubtful 3, there is no age. Okay, it is Markandeya. Until it is removed from the books of accounts, it will become permanently doubtful 2 only, except the following thing. Erosion of value. That is, at the time of taking a loan, they have given a security of 1 crore. When you identify the account as an NPA, the erosion of security is more than 50%. In that situation, straight away it will classify to doubtful asset. It need not go to the substandard doubtful 1, doubtful 2, doubtful 3, etc. If the security is eroded to the extent of 90%, it can directly go to the loss asset. There is no compulsion for the bank to identify as a NPA for the first year, substandard only, provide 15%, then doubtful 1, doubtful 2, doubtful 3, etc. Wherever security is eroded. In respect of NPAs, every 3-year valuation has to happen. Because valuation has to happen for once in every 3 years. Yes, ma'am? Yeah. See, valuation means only by the expert valuation. We are not going to do that, not even the bank. Banks empaneled valuer will do the valuation. What is loss asset? Loss asset is an asset which has been confirmed uncollectible. It is not going to come at all. Bankers decide, RBI decide, or whoever is decide. When an asset is becoming identified by anybody that it is not recoverable, it becomes loss asset. Another items I already told you, 90% of the security is eroded. That also directly go to the loss asset. Once you identify this income recognition, reversal interest, and then as classified as NPA, we have to go into the asset classification. Asset classification will be done only borrower-wise, not facility-wise. This all of us know, this has been settled. Once you have a term loan, OCC account, and bill discounted, all the accounts are regular. Only one check discounted has been bounced. It becomes an NPA. Everything will become an NPA. CC account becomes an NPA. Term loan also will become an NPA. Bills accounts also will become an NPA. Except the following 3 cases. Whenever a bills discounted is backed by an LC of another bank, that you don't have to classify. So, Sundararajan has 3 facilities: bill discounting, CC account, and term loan account. CC account and bill discount CC account and term loan may become NPA. If my bills are being supported by letter of credit by my supplier, then that need not be classified as NPA. That is an exception given. Other than that, once a borrower, one borrower, whether he is a person can be either performer or non-performer. He cannot be a nabumshak. It has to be only either this side or that side, except for this example. And mark-to-market value of derivative calculated only in respect of those transactions which we are not bothered. Third item is additional facility granted to a restructured NPA. Whenever an account is restructured, as I was telling you about this DCCO norms, etc., they are given additional facilities. Those additional facilities, I don't have to classify for the purpose of NPA classification. That will continue to be a standard asset because that is the additional sanction which has been given only for this particular purposes. Is there any doubt in this? Again, I repeat, it is on the basis of the borrower, except 3 cases. Any doubts? So that is separate. A loan and deposit is totally, that I'll come to that separately. It's there. I thought it was there. It is there. I'll talk about this. Let us talk about other than deposits. So this is what is exactly. Next, assets classification under consortium of accounts. Consortium is now slowly going away. Only for the largest of the largest advances, consortium is there. But in respect of consortium advances, earlier there was a situation, what the leader says, yata raja tata praja. Now it is not like that. That bank has to examine what is the recovery as far as this particular branch is concerned. If the recovery is good, you can continue to be classified as a performing asset. If the recovery is bad, even though SBI classified as a performing asset, I will classify it as a non-performing asset because my account operations are not proper. Second issue, there is a lead banker. He collects the money on behalf of all the member banks and distributes the money to everybody. Until it is distributed, it is not my money. He keeps it. He allocates and he says that I am remitting the amount. In this case, the practical side of events occurring after the balance sheet can happen because the bankers have collected before 31st of March and they are distributing the money on 1st of April or 2nd of April, the money is coming. I can consider this as a performing asset because the lead banker is the collector. He has already collected the money, he is distributing. But if it is not coming before the particular date, you will classify it as a non-performing asset only. But the same thing will not be applicable in respect of multi-branch financing. Same borrower has limit from multiple branches. Whether it is possible? Yes. Main office is in Bangalore. Sub-office is in somewhere in interior Karnataka. There I will have a limit of 15 lakhs. Here I have a limit of 50 lakhs. That is a sub-limit which is being given. That sub-limit, whether the money is coming, crediting, reversing, regular, nobody bothers. If the head office account is regular, that also will be standard. If this is an NPA, that also will be an NPA. Only thing is, please ask for the certificate from the parent branch to ensure that auditor has completed the audit and they have classified as a standard asset. 31st March 2025, they are classified as standard. You cannot classify 31st March 2026 as standard. You will have to ask for the current year certificate and then only go there. This is very, very important. And NPA, as I already told you, need not go for stage-wise implementation. An asset can be a loss asset in the now itself, or next year, or next year. It need not be going through the process of stamp standard, doubtful, loss, etc. Once again, advance classification, as the gentleman was asking, advances against term deposits, NSC is eligible for surrender, IVP, KVP, etc., need not be treated as NPA, provided margin is maintained. Provided margin is maintained. Advances against gold ornaments, this exemption is not available. Exemption is available only in respect of those specified securities. Gold ornaments and government securities and other securities is not an exception. It will be considered for the purpose of non-performing asset only. Substandard accounts which have been subject to restructuring would be eligible to be upgraded only after the specified period, as I have already told you. Specified period is 1 year from the date of second moratorium which happens. Important item. An account which has been guaranteed by a government. How it has to be classified as an NPA, whether it can be classified as NPA at all. Sir, government is guaranteeing, sir, doesn't matter. If the state government guarantees and the guarantee is invoked by the branch, it will become an NPA. If it is a central government guaranteed account, it is invoked and central government repudiates, then it will become an NPA. So which means the period from which the branch invokes the guarantee until they get the money or get the repudiation, they don't have to bother. It can consider as a standard asset. Is that clear? But I am not clear. How do you know that whether the guarantee is repudiated or not? State government guarantee, once it is invoked, it will be available on the record. You can classify it as NPA. Central government guaranteed account, how will you know that it has been repudiated or not? So you are also not clear. Any input? No? Pardon, sir? Correct. I don't know whether he has repudiated or not. See, I have raised a guarantee. Money is payable, sir. Money is payable. I have taken a loan that is guaranteed by central government. I have not paid the amount. So my bankers have raised with the central bank and central government stating that, please honor this, you have guaranteed the account, it has not been paid. Either they have to make the payment or they have to say this guarantee is repudiated. I will not pay for any reason for that matter. Any reason for that matter. The only option which according to me is we have to go to the central government guaranteed accounts files. Definitely there will be sufficient correspondence which are available. The branch managers are not that very clever to avoid those correspondences. They will be keeping the correspondence in the files only. Because at the point of receiving the document, nobody is bothered. Whatever paper they comes, they know that it has been filed in that paper, they will keep it there. You can examine number one. Second issue, management representation. SA 580 will come into an example. Please ask, give the information to them. Please take a confirmation from them. All these things we have already invoked, but it has not been repudiated till their date. Next question, whether this MRL will protect you fully. Will protect you, but will not insulate you. If you don't see the file and then you take the representation, leave it like that, there is a difference between protection and insulation. Insulation, you are fully protected. Protect means you are protected to that extent that you have also taken necessary steps and precautions to verify whether it has been repudiated or not. You please go through the files, examine, you confirm that it has not been repudiated, and then you can ask the MRL also. On that basis, you can go through. This is the only way we can go about that. Next important question, we are almost on the final stage, sir. I will complete in 5 minutes, sir. Sorry for the next speaker. Provisioning, whose responsibility? Bank, branch. How many of you are saying is bank and branch? At least open your eyes here. Bank and branch. Unfortunately, all of us are failing. Because RBI is saying the primary responsibility of making adequate provisions for diminution in value of assets, investments and other assets is that of the bank managements and the statutory auditors. It is not that bank management is the head office and statutory auditor means CSA. It is not the case. As far as your branch is concerned, that branch is the branch management. As far as the auditor, you are the auditor. So RBI is very, very clear. Provisioning is the responsibility of the bank management and the auditors. So you are under responsibility to identify whether the accounts provision has been appropriately done or not. Because you cannot stay away from the saying that it is the responsibility, whatever they have provided, we examined. Whatever they have provided, whether it is right or wrong, only we are verifying. Please understand. I understand it is the responsibility of them before you do the audit. Once you do the audit, you are under responsibility for ensuring that it is being done. This I am not telling, sir. Sundararajan is not coming and telling. Sundararajan is reproducing the voice of the Reserve Bank of India. Please understand that we are responsible for making the provision. Once again, I had a lot of questions from various members of the various branches. Sir, we are not making provision at all at the branch, sir. True. You are not making the entry for provision at the branch level, but you do the computation of provision and send it back. Head office makes the provision on account of this particular branch. So, what is to be provided is the responsibility of only the branch auditors. Please take care, you have to do that only. The assessment by the inspecting officer of the RBI is furnished to the bank to assist the management and statutory auditors in taking a decision. This is wherever your branch has been covered by annual financial inspection by the Reserve Bank of India. Please ask for the report. In that, they would have automatically given specific decisions which are liable for being classified as a NPA. All of us are concurring? Sir, I thought our bank audit is easy. You have added one more responsibility on us, which was not. All along I was thinking that it was not my responsibility. Unfortunately, RBI has casted that responsibility on us. We will follow that. The subsequent slides are pure arithmetics. What is the provision which has to be made in respect of standard advances, commercial real estate exposures, all these things. So, we certify a capital adequacy statement. In that, we are talking about real estate advances, commercial real estate. None of us understand what is the real reason for that. On that basis only the provision is being made. So commercial real estate exposures is provided at standard advances. I am talking about standard advances is provided at a higher value. For which, who is providing the information? Branch auditor is providing the information. In the capital adequacy ratio, you prepare a statement of advances. On that basis only it is being taken. Housing loan extended teaser rates. Nowadays teaser rates are not happening, but if at all there is a teaser rate, you know, I hope all of you know about teaser rate. Interest rate at 5% for 2 years. After that it will be according to the market rate. So in those cases, additional provision has to make in case of standard advances. And one item I wanted to mention, accounts restructured during the year classified as standard. I was telling you, restructured accounts by DCCU operations will be considered as standard. But in those cases, 5% has to be provided as advance. So once again, you have to classify that account in that particular area so that even in the standard, provisioning will be an escalated provisioning. Not the normal 0.25%, a provision of 5% will be made. So it is our responsibility to classify the advances appropriately. Substandard assets, 15%. Without, now DSCG is not there. Without ECGC coverage, etc., 15% flat has to be provided for with one rider. Whenever an unsecured exposure happens, I was talking about unsecured exposure in the initial stages of the outstanding value, that is an exposure is there, I will have to provide for an incremental amount, which is 25% I have to provide. And once again, an escrow account is there, which may not be available in smaller branches. So instead of 15%, I have to provide for 25% if there is an unsecured exposure in respect of those items. But it is a difference from the erosion of security. Once there is an erosion of security, it will be classified as doubtful. More than 50% doubtful, more than 90% loss. That is different. Here, unsecured exposure. That is, I have given a loan for both fund-based and non-fund-based limit of a particular borrower at an amount of 10 lakh. I have a security to the extent of only 3 lakhs. In that situation, consciously I have given a loan. Initially I have given a loan. There is an erosion of security. At that point of time, I have, why this provisioning is happening? It's only for avoiding the, protecting the risk. Already I have taken the risk. That risk I am providing at a higher value. Doubtful assets, very simple, 100% for unsecured portion. In respect of secured portion, D1, D2, D3. D2 is for 2 years, D1 is 1 year, D2 is for 2 years, and D3 is for after that. Even the secured portion will be provided for. And loss asset, 100% has to be provided. This is a ready reckoner which I have given. whenever the NPA date, I'm not talking about before 1/2022, any day. Whenever the NPA date falls in one of these tables, what you call doubtful will be classified accordingly. So current year substandard assets will be provided at 15%. And last year provided will become D1, and year before it will be D2, and 2 years before it is D3. Is there any doubt in this? It's a very, very simple example. I have already circulated to the branch. They will be circulating to you. I have also given my email ID at the end of the slide with a big, big thank you for all of you for the patient listening. Thank you very much.
That was very insightful session from Sundararajan sir. Now I would like to request CA Kavita Parmesh Madam, our chairperson of Bangalore branch, to give a token of appreciation for our speaker. A huge round of applause, please.